Hello everyone, it is Friday, May 30. Today we're taking a closer look at the euro and British pound charts to assess potential market movements. The euro staged a recovery following a sharp decline triggered by news that a US trade court had blocked a broad range of Donald Trump's tariffs. The rebound came amid a relatively quiet macroeconomic calendar in the euro area, allowing the single currency some breathing room. Later in the day, traders digested fresh US GDP data, which turned out to be weak. The American economy contracted by 0.2% in the first quarter, slightly better than the 0.3% decline initially projected, but still underscoring sluggish growth. Economists warned that Trump's trade tariffs are likely to deliver a more pronounced hit to second quarter figures, and markets are already pricing in a softer outlook. Adding to dollar pressure, US jobless claims came in above expectations, fueling a broad sell-off in the greenback and lifting risky assets. And a further twist, the Trump administration filed an appeal following the court's initial decision seeking to reinstate its tariff regime. A federal appeals court responded by temporarily pausing the lower court's ruling, effectively reinstating the countess' global tariffs for now. Against this backdrop, both the euro and the British pound gained ground, putting additional weight on the dollar. Now, let's take a look at today's macroeconomic calendar. Key releases include German retail sales, where a weaker-than-expected print could put pressure on the euro. The calendar also features Eurozone data on corporate and household lending, along with the M3 money supply. Italy and Germany will report consumer price figures for May, which are expected to show minimal change from April. The focus of market participants will be on US data, particularly the core PCE price index, the Federal Reserve's preferred inflation gauge. Analysts expect it to rise just 0.1% in April, with annual inflation slowing to 2.5%. Such a reading could reinforce expectations of Fed rate cuts, weighing on the dollar and potentially giving the euro and the pound additional upside momentum. It is also worth noting that today marks the final trading session of May. Thus, risky assets may struggle to reach new monthly highs. Caution is advised when considering long positions. Also on the agenda are the University of Michigan's final readings on consumer sentiment and inflation expectations. Later in the day, markets will tune to a speech by Third Federal Raphael Bostic for further policy cues. Turning to technical analysis, the 1-hour EUR USD chart shows that a false breakout at 13.36 would trigger a buy signal, potentially pushing the euro up to 1.1386. If the price breaks above this level, the pair could extend gains toward the 1-month high of 1.1416, with the potential to reach 1.1453. At this mark, I would recommend going short on the rebound, targeting an intraday correction of 30-35 pips. Short positions at 1.1386 and 1460 should only be considered in the event of a false breakout. In a bearish scenario, if the price holds below 13.36, pressured by upbeat US data, the euro could drop to 12.96, with further downside potential toward 12.56. At this level, our long positions on the rebound would be justified, aiming for a 35-40 pip recovery. Long positions at 1.1296 and 13.36 would only make sense if a false breakout occurs. Speaking of the British sterling, its bearish correction has come to a halt. The overall bullish trend remains intact, but GBP USD may get caught in a sideways range. Therefore, long positions should be considered around 1.3456 or 34.16 in the event of a false breakout. A rebound from 33.82 would also be a good opportunity to go long, targeting an intraday correction of 35-40 pips. On the flip side, selling opportunities could emerge at 1.3505 in case of a false breakout, or at 1.3555 on rebound. After all, setting a new one-month high is unlikely at the end of the month, so a correction of 35-40 pips from 35.55 could be a solid play. Good luck to everyone to have a great weekend.